Thank you, Francis, and thank you for inviting me onto this webinar today. Very nice to meet everybody, if only virtually. For those that you haven't met, maybe we will meet at some stage in the future. So I'm here today to talk about Home Reach, which is firmly established now as the third tenure in the marketplace. Just to give you a little bit of information about Halo, for those of you who don't know us, we're a for-profit registered provider. The reason why we're a for-profit registered provider is for acceptance by local authorities. Local authorities need to have registered providers on the paperwork for affordable housing. It just gives them confidence. Our cornerstone investor is Lancashire County Council Pension Fund. So we do have a local authority covenant, which is good when you're talking to local authorities, and also helps with our engagement with the house builders. We started doing Section 106 units back in 2015, but then very quickly Homes England announced their shared ownership affordable housing grant programme. It was a £4.7 billion programme to deliver 135,000 additional units into the marketplace. We came in on this programme, as I say, around about 2017. And we're now the second largest recipient of this grant programme. We've drawn down in excess of 80 million and facilitated over 5,000 new homeowners, firmly establishing Home Reach as a third tenure. We've also delivered 27.5% of all shared ownership legal completions across England between 2016 and 19. And we work very closely with all the brokers across the country who work with the house builders. So we tend to have a very good relationship, but if there's any brokers on the webinar who don't deal with us, please feel free to contact us either by the builders or details are provided by Kensington. So what you see on the screen now is a list of the builders, some of the builders we deal with. I know you just heard from Adrian McDermott at Barratt, and Barratt are one of our biggest customers. We deal with them on a national basis. And we've done in excess of 550 units with Barratt and about to do more with them because they see this programme as being very, very beneficial to them as a company. But we deal with smaller house builders too, Rowland in the northwest of England, Wayne Homes, Duchy Homes, Strata, Kia, Lovell, Crest Nicholson down in the south. We do a lot with Crest Nicholson, only fairly recently engaging with them, but we're now starting to build up quite a reasonable portfolio. So you see there just a selection of the builders we deal with. So we now quickly move on to the key statistics for Home Reach. So we deal with 50 plus house builders. We have 2,000 extended family house builder salespeople. We don't have any sales force ourselves, except for our house builder team, which numbers 3. So we have 2,000 people selling Home Reach across 223 live sites across England. This is just an English programme. Wales and Scotland have their own programme, and we will be engaging with them at some stage in the future, but this is just for England. We've drawn down, as I mentioned earlier on, about 80 million in Homes England grant awarded over that period, and we have about over a million visitors. We have had over 1 million visitors to the homereach.org website. So an awful lot of interest being built up by our own advertising and the house builders advertising. 5,000 plus plots contracted with house builders. So that's 5,000 units they wouldn't have sold if we hadn't had Home Reach in the marketplace, and 5,000 mortgages, or possibly could be cash only purchases, but typically with mortgages that have been acquired via the brokers who deal with the mainstream with the house builders. 140 to 360 legal completions a month. So an enormous amount of work there for the lawyers to take on, and also the mortgage lenders too. And we now have 5,000 plus Home Reach homeowners in homes that they didn't think they were going to be able to afford previously. So we move on to our next slide, and this is just an iteration. This is Taylor Wimpey's iteration of how they see our program: part buy, part rent. You buy 50%, you rent 50%, but 100% your home. So you get a 125-year lease with this home. There's no ground rent attached to it, so none of the funnies that we saw a couple of years ago. with ground rent. There's nothing funny about this lease. It is a government approved lease, and it's approved by all of the mainstream lenders in the country too. But it does allow you to say your house is your home and your castle. You move on to the next slide. This is just an example of the differential between outright, home reach and Help to Buy. So to buy an outright purchase home on the right hand side, you'll see you need a mortgage of £180,000 on a £200,000 outright purchase. You need 10% deposits, it's £20,000. You need a household income of £40,000. For Help to Buy, you need a mortgage of £150,000 rather than £180,000, and a 5% deposit, still £10,000, and you need a household income of £33,500. Finally, on home reach, you need a 5% deposit, which is £5,000 because you're only buying a 50% share, mortgage of £95,000. You need rent on the unsold share, which is set at 2.75%. You need a household income of £23,000. So a dramatic increase there from £33,500 to £23,000, enabling, we believe, about a third more buyers to actually become homeowners. And this was particularly prevalent to me when I was doing a site visit on a personal site in Carlisle. There was first-time buyers looking at a 4-bed detached home up in, as I say, in Carlisle. This would never have happened prior to Home Reach coming along, where they could buy a 50% share, get a mortgage for a 50% share, get the house of their dreams today, and not have to move. And we all know how stressful it is moving. So it's really enabled an awful lot more people within the marketplace to come along and buy the house that they actually want today. And I know with Barratt, we've actually enabled somebody to buy a 5-bed house up in the northwest of England. So again, prior to this, to buy an affordable home that's a 5-bed has never been possible, and we've made it possible. We move on to the next slide. So the top features and benefits of Home Reach. So it's not an additional social affordable allocation for the house builders, which is dictated to by the local authority. This is taking existing homes that they're selling and making them more saleable. So that's the real X factor, dare I say, of this particular scheme. So Home Reach provides an additionality by widening the house builder's customer base, includes access to supplementary markets such as the rental sector and cash-only purchases. So, for instance, if we have a divorced couple and they have to split the proceeds of both their home and their assets, all of a sudden they have the ability to become a homeowner. In fact, we had one couple who actually decided to live on the same estate. So, although they were divorced, for the benefit of the children, they were able to buy on the same development, albeit not next door, I hasten to add, but still on the same development to allow the kids access to both parents. And we believe, as I mentioned earlier, franchise 300% more buyers than Help to Buy. So that's a very big increase in potential home buyers' opportunity. Less upfront purchase costs. Obviously, as we know, the Chancellor recently announced a stamp duty holiday up to $500,000. But prior to this, Home Reach didn't require people to pay any stamp duty because you're only getting a mortgage on 50%. Therefore, it was typically below the stamp duty level. I'm sure once the stamp duty returns to the marketplace, then that will become another very important feature, because it's about actually finding the cash on the day of purchase, and stamp duty, as we know, is a cash. You can't add that to the mortgage. Home Reach is fully supported by mortgage lenders due to low capital equity deployment and very low default risk. The default risk on shared ownership, which is what Home Reach is extremely low in the marketplace. I know it hasn't been a mainstream tenure, but even so, the default risk is very, very low. And all the lenders are very keen to lend on shared ownership, and there's increasingly more and more lenders coming on to brokers panels. Proven to assist buyers to purchase and trade up the right size homes. I mentioned earlier on, first time buyers buying a 4-bed home is something that is pretty unique today, but that's basically what Home Reach enables potential purchasers to do, but also to trade up to the right size home. As we know, Help to Buy caps are coming into the marketplace. It's been delayed by a couple of months up until May 2021, but when those caps come in, the builders are going to find it increasingly difficult with not having Help To Buy above that to sell their homes, but Home Reach is really going to assist with that. It reconnects and re-engages with longer running legacy schemes to the local market. So that may well be that there's units outstanding on sites, or houses outstanding on local sites, and it enables people with lower regional household incomes to actually buy. Income levels across the country are still fairly low, and as we know from publications we see and media announcements that it's becoming more and more difficult to actually become a homeowner, but Home Reach does help with that. So coming to the last 3 points, Home Reach provides a more effective and appealing market reach through property portal, search engine, etc., because you can the house builder can actually advertise the house at 50% of the cost. So a £200,000 house, they can advertise at £100,000. So all of a sudden people look at that and say, oh, maybe we can now afford to become a homeowner rather than a renter, which in turn increases inquiries, site visitors, additional lead generation for outright sale too. So a lot of the visitors that sites have had, house builder sites have had, it's actually gone on to find that people can actually buy with Help To Buy, but the encouragement of Home Reach has enabled people to come on and actually then become qualified by the brokers. And the brokers are very, very important part of this process. We engage with all of the brokers in the marketplace because we believe they have a very good relationship with the house builders, and we in turn engage with the brokers because they are a very integral part of this particular process, which is the reason why I'm so pleased to become involved in this webinar. The house builder are able to control the customer journey and the HBF support the inclusion of Home Reach. So in other words, they can then put their customer satisfaction surveys forward, which they can't currently do when they deal with Section 106 with housing associations typically, but the HBF have given special dispensations so they can include these customer satisfaction surveys, and typically they tend to be very, very positive because these are people that have never thought they'd be able to buy before and now all of a sudden become a homeowner. So it's a very important feature, the customer satisfaction surveys for the house builders. So that completes the formal presentation. I'd just like to thank everybody for coming on to the webinar today. Just one final slide here. Sorry, I missed the final slide. That's just some marketing, visual offers of some of the marketing the house builders do. Just to give an example of some of the marketing that some of our customers actually carry out. So now we are at the end of the presentation. So apologies again for that. But obviously very pleased to be able to present our Home Reach presentation to you today. I believe my details are going to be made available via Kensington. If anybody wants to have a further conversation or isn't a broker that we currently deal with, then please, by all means, don't hesitate to contact me. But thanks again and look forward to speaking to you all again in the future.